Hi everyone, this is Nikki and you're watching the Awesome10X Global Market Update. It's a Tuesday, May 11, 2021. So you might be feeling defeatist mode today because last night was the largest drop of NASDAQ since March 2020. So we have to understand what was the drop. I'm not sure if it was March 2020 or is it March 2021, but it's been the largest drop in the NASDAQ. So let's just read the highlights. You could see the last night, these are what fell. Dow Jones just off 0.1%, but the biggest drop was NASDAQ, down 2.5%. And you could see that most of your tech stocks continue to get pummeled down, even if they were falling already, even prior to this drop. So the small caps especially have been wrecked like 40, 50, 80%, some of them are. So let me show to you just the current prices. For instance, Peloton last night was $87, but for Zoom video, it's already $288. It's down 51%. Your Yatsen Global is now down to about $9. It's now 64%. I'm just going to read to you some recaps. EHang, an eVTOL player, is down 83% from about $129 last price of the peak of this year to about $22 this year. Now, Alibaba dropped from about 319 to 219, just so you have an understanding how deep the drops have been. It's already 30% down for Alibaba. Baidu is already down 48% from 354 to 180. It's closing in to about 50% drop already for Baidu. Fastly is already dropping 70% from a peak of 136 to $42 after a nasty earnings related drop. ABML 4.9 to 1.58, already down 70%. We'll also discuss the earnings front. Last night, you've got the connected TV companies down 20% apiece after earnings sell off. SunPower is down to about 60%, $57 to $21.44. Your SunPower and Sunrun are both down 60% apiece, $100 down to about $40. Can Sunrun go to $30 or a 70% sell-off? If that's the case, then you're seeing SunPower dropping another 20 to 30% from $21 to about $17. We have to take a look at the scenarios here. Array Technologies is down 54% from $54 to $24. Your Agora from a high of 115 is now trading to about $40. Your Lemonade is now Affirm is down 60% from about 146 to 57. Your Lemonade is down from 188 to 71. XPeng down 65% from $75 to $25 a piece. Your Lucid Motors is now down to $18.64, similar to Palantir, now trading at $18 from a peak of $60 and $45 each. C3AI is also not far, also dropping 70% already from 180 to 53. Unity dropping from 175 to $81 or 50%. Roblox is still steady, $80, about 64, although it could fall further to about 50. DouYu is dropping right now to 7.77 from a peak of $20. Take note that DouYu is going to merge with Huya this June. Dada Nexus is now down to $20.96, a whopping 65% drop. RC is now dropping 77% to 8.19. I think it even from $36 high. Agrify is down to about $8.02. Your Sundial Growers is now trading at 73 cents. Your Teladoc Health is now trading a whopping 54% drop to $141. American Well is now down 70% to about 12.76. Bionanogenomics is 501. Dermtech is 31.75. Ascensus is now down to 1.66. NanoX Imaging is 26.18. Rewalk Robotics is down 72% from 6 to 1.65. Immersion is down 50% to $7.59. Ceragon is $3. GSAT is $109. Twitter 51. Pinterest is $58. Spotify $228. Roku $301. Desktop Metal is $10.98. Nano Dimension 6.22, Copen 6.54, a 50% drop. Eman is $2.26. We are seeing significant drops. You're seeing here 50, 60, 70% drops. These are just a few snapshots of some of our Awesome10X picks that we love to buy on this drop. Now, obviously, that drop is easy to say, hard to do. What am I doing? I'm adding cash into my account. So actually for eToro, you're seeing a bleed here. I have some NVIDIA, I've got some Baidu, Twitter. You can see that these are all in the red. I've added some cash just to mitigate a potential considering any 10 to 20% drops in the market so that I could just hold on to my position. As you'll notice, my NVIDIA is actually a CFD product and therefore it's a times 5 leverage. That's why a 4% drop here could actually be, that's why 576 to 570 is just a 1%, but it's already 5% here. A 2% drop is something like 10% because these are levered. So I have a leverage long on my Nvidia and some companies here. That's why we are getting these reds. Nonetheless, I'm confident of the companies that I chose. It's just that it's a higher risk appetite for others that I'm willing to buy them at X5. So, for instance, for Enphase, I think that it could drop definitely another 10%. And so I should prepare myself for any drops. That's why I made my stop loss very far. And I made sure that my cash is there intact in case the market bleeds. I kept telling people that they have to hold their positions no matter if the markets can continue to bleed. But let's take a look what type of scenarios we can paint in the US market. So the tech sell-off has been deepening on inflation fears and capital tax rate hikes. Tax rates. There's opinion that Biden is going to increase your taxes to double, and it is deepening the sell-off that we are already seeing. You could see that Asian tech stocks also tumbled, similar to your Chinese names. Your JD, your Baidu, your Alibaba, your Tencent is also falling. There's a regional equity gauge suffering its biggest slide in about 2 months after a sell-off on Wall Street. Worries about growing price pressures, inflation. Selling was heaviest, wherein in Hong Kong, it also fell 4%, dragging the broader market down following a 2.5% sell-off on the Nasdaq overnight. You could read a few comments here. Markets reversed course overnight. Inflation fears drove investors away from growth stocks, notably the tech stocks, to pick cyclicals amid the momentum of the economic recovery. Soaring commodity prices sent the cost of copper, iron, lumber to record highs as the latest indication that inflation may not be as transitory as some policymakers seem convinced about. So even as profit taking have been dampening some commodity price rises. A test case on US inflation will come this week when the Labor Department releases its latest consumer price index this Wednesday. Inflation's shadow looms large, and we do think that there is a limit to the Fed's tolerance for inflation. While the Fed has tolerated the rise in 10-year yields to 2.5%, we think there could be a line in the sand if 5-year inflation swaps head towards 3%. Elsewhere, you're seeing tech conglomerates like Tencent and Alibaba falling more than 3%. Food delivery, Meituan falling 8.5%, losing more than $30 billion in market value this week. Tech exposed indices such as Seoul and Taipei also fell 1.4 and 2.4% respectively. So, paying the price of the pandemic will come down to those who are best positioned to afford to pay the price. And big tech are the wealthy corporate citizens of the world. This is where I think the governments will try and levy the cost of this pandemic. So a lot of people are speculating that technology firms will have a doubling of taxes, will get a lot of penalty or so whatsoever. And therefore, there are concerns of tech stocks falling further. Let's see how low these tech stocks can continue to fall. Let's see. So for Bitcoin related names, let's take a look at it by sector. So Humble Pay falling down 20%. The lone green in the crypto related, stock related names are actually Coinbase, rising 11% last night after getting an outperform rating from Oppenheimer. Let's look at other watch lists for our sector plays. A lot of your tech related names are falling down. Fiverr Upwork continues to fall. Bilibili continues to fall. Roku continues to fall. With these considerable drops, we are saying that while it's very hard to see that your portfolio is bleeding red, we're here to show to you our own portfolios already dropping 20% as well, without leverage. So I have a position that's without leverage. From my peak, I'm down about 20%, even if I've taken some profits off the table and tried to redeploy. As you saw a while ago, some of the stocks have fallen 75% from the peak. That means if you bought somewhere in that, if 100 fell down to $25 and you unfortunately bought it at $30, 30 to 25 is already approximately 20%. Nonetheless, you avoided that 70% sell off in the first phase of the drop, but from 70% going 75% down or 80% down, that's the majority of your losses coming from, which I feel isn't really a huge drop. If you started buying your Dada Nexus, for instance, at 26 and it's right now at $20, just because it's selling at 20% doesn't mean that you have to take your profits and just hold on to it because you want to get some profit. So I'm here to pacify most of the people who are wondering about their strategies on what to do with their companies. And I'm here to say Awesome 10X is fine with these drops. It is really hard, but it doesn't mean that you have to give it up and sell it at any price. Just like March 2020, when the market was giving up Roku at the cheap price and Shopify and all those companies that are great, you shouldn't actually be worried about selling your companies because the market is going to eventually over the next 2 to 3 to 6 months. So definitely right now, May, it could last until June, July, August. So we want to just accumulate. It's easy to say, it's hard to execute. You have to watch this market downfall um, to be more of your entry point actually. So it doesn't matter if you are already in the market and you're getting further losses in the red. If you want to get, say, $6 coupon or $5 coupon, I think that it is a great opportunity to buy those names. And therefore, I wouldn't really stop you from posting those positions or at the very least just holding on. Last night's biggest drop were connected TV items. And to be honest, I'm not surprised about the drop on the Trade Desk, Magnite, Pubmatic, as I do believe that they were actually overvalued to begin with. So we have been saying in Awesome 10X, if you'll notice, we were saying digital advertising tiers were very expensive since February. So Magnet at 60 going down to 28 doesn't surprise me. We bought it somewhere about $9 to $4 here. And so this drop can continually fall. Let's just assume that it does drop here at the 200-day moving average, that is 25. If you've got questions on specific companies, you can put it on the comments and I'll take a look. But for the trade desk, this drop is for me warranted. The drop from about $1,000 back to 489, this 50% drop from its peak is valid. So we've been giving already our sell recommendation on this digital advertising space since February and January. You'll notice that the trade desk has always been peaking at 900 and 800, and this drop has only worsened because of their earnings. Nonetheless, would I actually buy it for the trade desk? Not yet. But if it drops, say 80%, I might be tempted. For other companies that have fallen 80% already, I'm tempted to buy them. But for the other companies that are still 50% drop, it could fall. Example, Peloton at 87 could fall to about $50 to $40. Zoom 288 could fall to about $240 or $200. Yatsen Well, I don't know if people would really buy it at 9. It could still fall further at 7. Nonetheless, I think for companies like this, example, 80% EHAM, this is already 80% down. So perhaps the downside here is less than 10 to 20% already. In fairness, those that are 80% drop, I think are very much, if you're gonna ask me, the downside might be lesser on them rather than higher. I'll try to do a filter based on sorting them highest to lowest. Sort this column. So you could see that the largest drop has been eVTOLs, EHAM, that's the largest drop. And then RC Moto, the largest drop, ESXC. Sundial is a meme stock. So I'm not surprised about meme stocks falling 80% or 90%. And you're noticing that the biggest drops here, the 70% drops here, are mostly the, if you look at the sector, this is eVTOL, this is medical devices, SPACs such as CCIV, artificial intelligence, telehealth. So you're seeing that it's mostly belonging in the small caps. Notice that the market caps here are about less than $5 billion a piece. So these are your micro cap sector. Notice how the large caps are actually behaving. Your large caps like big tech, Roblox, your Baidu, Spotify, Roku, Twitter, Pinterest, Zoom Video. These are 80 to $100 billion, $50 billion companies. They fall. Their fall has been less. So the big caps have been falling, but it's not as huge. It's falling 30% to 50% a piece. So these are your. You could see Teladoc, Unity in these levels. 50% drops already. So yeah, that's something that you have to wonder. Example, if you see that microcaps are falling 80% drops, it's possible that Nano Dimension here at 6 can continually fall to about $5. So if it's a small cap, it is a possible it's possible that they could still fall, no? So you just have to be aware. Nonetheless, even as they might fall, example, EMAN is down 58%, even if it might fall, just be aware of the fact that secular wise it's good. It's just that the market will punish the small caps more. Immersion 55%, EMAN 58%. It means that if you are very bearish, let's just assume a conservative assumption. If it drops 80%, then that means Eman could fall, say, $1 something. So from $2.20, it could fall maybe $1.50 or so forth. Should that be alarming for you if you have Eman? I'd say that in the short term, anything can happen. Just tells you that for the short term, your microcaps, no matter how low it already is, can still fall further. But don't worry about them. You don't have to short them. I think that the majority of you should just keep on your positions. So we know that the smaller the company is, the more it's easy to get pummeled down with or without a valid reason. No? So just because it's a small company, the people will normally assume that they are easy to topple down or their businesses are less resilient. But we actually studied these companies and they have partners to actually help them through this sell-off. So I'm confident about Agrify, even if it can fall to about 7 or 6. So I'm just sharing to you my own how I'm handling and how I'm looking at this market sell-off. Yeah, so I'm gonna read comments if there's any. What's a good entry for ARC? Okay, ARC Innovation Fund. You have to understand that ARC Innovation Fund, the majority of their shares are in Tesla, Square, Roku, which are falling 30%. So let's assume that for clarity per se, 50% drop, 160 divided by 2 is $80. Assume that $80, you've got a lot of people. That's an average, meaning ARC ETF, of course, isn't just holding your Tesla, etc. But I'd say that if you're assuming the most bearish case, it's already fallen from 160 to 100. That would tell you it's already fallen something like, how much is it? What's 100 divided by 160? It's already fallen 37%. So let's assume that it will fall 50%. That means that your 100 goes to 80 or just another 20% sell off. There's no specific science here. There's no predictable bottom, but I'd say that people would generally be posting somewhere here at 50% off at $80, so to speak. Have yet to start investing in the US stock market. Any suggestions for my first three stocks? We have actually we made the Christmas shopping list for me. I just showed you an Excel file a while ago. A lot of the big companies, I always tell people to have for their first company something large and then something small. So I'd say that for the large companies, you could choose an Alibaba, you could even choose some Nvidias. Perhaps you'd like some Baidu or Zoom Video or Roku or Spotify. But then you also want to have something small, relatively small, that will become big over time. Maybe if you're an electric vehicle fan, you could choose a Lucid Motors. And then of course, for others, they usually have as their first stock picks. Actually, they usually get Tesla or they get something like a Google or some of the FAMGA names. Nonetheless, if you take a look at the big caps like the Mega Charizards, the one I call like Mega Charizards, they're not gonna give you a 10x reward. Meaning the real reason is because Apple, Google, all of these are already too huge. So nonetheless, even if you won't make 10x your investment on say an Alibaba, it still will give you about 3x. So you might want to choose this one, a 30% drop on Alibaba. I'd argue even JD. JD is falling to about $70. That is an attractive area for me. And then you're seeing Pintuotuo could fall something like 50% from its peak. So from its peak of about 200, it's now 120. It could fall to about $100. So we have seen companies fall straight. Some names going down 80%. Yun. So I'm a little bit more on a sector play. It's not really, I think three stocks is really actually very little. You'll notice that I typically would choose 25 stocks. So it's good to start with three. Maybe choose a sector you believe in. Sectors I believe in are renewable energy. So however you want your renewable energy to become, whether that is solar, you choose either Sunrun or SunPower or Enphase or any solar company that you prefer, or Next Era, or even a Tesla that's still a solar related, renewable energy related business. And then, of course, I think choose one healthcare. For others, they just usually choose ARC Genomics, ARC-G, so that they don't need to think which company they could get, whether it's Teladoc or PacBio or whatsoever. So usually, I think most people would just choose an ARC Genomic, and ARC Genomic has fallen from 111 to 76. Assuming the worst things could happen, can it go to somewhere like $50? I wouldn't say never, because genomic related names are still early stage. Nonetheless, I really believe this sector. So ARC Genomics is something that I'll be very much on the lookout from as the market continually sells off. ARC-G is going to be a place in my book. And for AI, I would choose Palantir. So I choose Palantir even if the market will sell this off. So high tech companies continuously are falling down. You could see that this could drop further to about 16 or 15. Nonetheless, I'd say that why would it fall 15? It's just the market. When the market is selling off, technicians would actually assume that this will drop because 25, 20 minus 5, it's 15. So it's really that random. It has nothing to do with the company's fundamentals. And actually, no matter if people talk about insider selling, any company that does an IPO or direct listing is already an automatic insider selling. So it doesn't really matter to me. In my experience in the US, insider selling does not really equate to actually a significant reason to sell off a company, unless that company is really doing badly on its actual business. What's your take on TAN? TAN is solar ETF. So I'd assume that just like all the ETFs, TAN would be fine, solar ETF, right? TAN consists a huge chunk of Tesla, a huge chunk of Enphase, Next Era Energy, And as you can see, this drop of 120 all the way to $70, I'd say that the drop to $60 is really already a bottom here. So it all depends on how you think about your position. Because an Awesome 10X, we honestly think in investing for the long term. We talked about the companies that will grow in the next 10 years. And that's the reason why I wouldn't really be bothered with TAN. So notice, TAN has gone from $20 to 120, a 6x. I think a significant pullback here at $60 isn't a problem to me. So whether 72 drops this week to 60, I'll be more than okay to buy this. So for the person who asked, what are the top three stocks to get? Since you're only choosing three stocks, I'd say get three ETFs. One, renewable energy. Yes, TAN could be it. Or you could get QClean. QCLN is the same, also doing for clean energy. So this is okay with me. QCLN consists of many companies that I really believe in, green energy names. So from 90 already falling to 56, could fall to about $50. Let's see whether the companies will continually sell off. But TAN, Q Clean are fine with me. If you're a fan of esports, I'm also a big fan of esports. But I think esports hasn't pulled back just yet. It's just 80 to 67 tells you that this is just a 20% drop. So it's not yet as big of a bargain. In terms of bargain, I'd say solar ETFs. TAN is good. Q Clean is good. Arc Genomics is also a good fund for me. What do you think about ADA, Ethereum, and NEO? I think that they're actually extended, but cryptocurrencies might not actually be my cup of tea. I mean, I don't really discuss much of cryptocurrencies in this channel. We usually just discuss a lot of Awesome 10X companies. Although I'd say that because of ADA, Ethereum, NEO, at the very, I think it's overstretched. It's overstretched such that I wouldn't be minding people who are taking profits on each one of them. So I'd say that people would be taking profits more than just really doing nothing. So ADA has gone what? This is like something like less than 10 cents to about $1.65 or 170. So whether it goes to $2 or something, I'd say that most of the majority of the market has already made a huge chunk. It's just a matter of whether they're taking some of their profits or they're just holding on to a small position. I don't know if I don't think aggressiveness in any cryptocurrencies is valid actually. So on Coupang, in terms of fundamentals, I don't believe it's cheap. I don't think it's cheap yet. Coupang right now, if you take a look, is still trading at something like 40 or $30 billion. So it got listed at 50 billion here. So a halving of 65 to 32 is still what? Very high. So market cap is still huge. I don't think that Coupang will get any love anytime soon. My experience with IPOs that are overpriced is gonna take 6 months or so. So I'm actually still bearish on Roblox, even if I like the company. I'd say that Roblox is a great company, but just expensive. And this is what happens when it's expensive. Look at what happened to Airbnb. When it got listed at 100 to 200 billion, eventually it succumbed to dropping 220 to 146. Notice what happened to Snowflake. Also, after a very expensive IPO, it has been dropping from 400 and still today new lows at 193. Be a bit careful on Coupang. I think that you've got about 6 months or a year to wait. C Limited I like, but C Limited might be falling down first to about 200 below. So there will be an opportunity with C Limited. As you'll notice, C Limited has barely even dropped. From about 280 peak here, it hasn't quite dropped below 200 yet. So if the market will continually sell off, I'd say that C Limited could potentially drop from 220 to about $200. But I'll look somewhere at 150 to 200 for a buying entry here. If you want to wait it out, just wait because the market might actually give you a cheaper price. Similarly, I'm taking a look at some of my strong, resilient company picks like CrowdStrike. 240 is now 187. However, as you can see, the market selling off can send CrowdStrike all the way to about 140 or 120. So just because C Limited has barely dropped doesn't mean that it won't fall, no matter how good the fundamentals are. I think Doyu is actually very cheap. It's now trading at something like $7.77. I wouldn't mind to just keep your shares. For those who don't have these shares, I think you're getting a good discount. Notice that the drop was just $6 in the last March sell-off, rallied back to 18. I don't think that this is a valid drop for DouYu, given the numbers of DouYu and the upcoming merger. So I'm more I'm more of a bullish camp with all these secular trend winners. And so any drops of these esport related names would be a buy for me. If um if you take a look at the portfolios right now, for instance, let's take a look at video games, you'll see that video games are really falling down south, no? Your Nvidias and AMDs, these drops are to me more of a buying opportunity. But it might still stay high. Notice that these big guns are less than 30% sell-offs. For Nvidia, that's just what, 10% sell-off from a peak of 650 to 570, could fall further to what, $500. That's why I'm more on the lookout, or I'm preparing. Preparation is my way to just be safe. It doesn't mean that the market will really sell off, because if I know that the market will sell off, I'll short, right? But I think that the market can actually just be volatile. The companies could fall, but I wouldn't really budge. If I have Nvidia, I'll just keep it, even if Nvidia could drop to $500. So I wouldn't be too worried about these names, Shopify, Nvidia, C Limited, even if they fall. Actually, even the positions that got bombed out, example for ABML down 80%, I think that it's already too low to actually continually fall, or even these levels like EHAM. Once a company has already fallen 80% for a full reset, I don't think that these full resets could continually fall further and further. Even if it drops further, the momentum to the downside has already been done firsthand. And so the drops here will just be 21 or 20. It's going to be less impact than before. So for DouYu, less impact from a selling off perspective. Even if it goes to $7, another 10% slide, don't actually worry. If you have DouYu at 9, 10, or 8 whatsoever, it should be okay. I think like it's more important nowadays when you look at the news to not actually be so aggressively panicking about these. You'll notice that everyone is I think like this the sell off, you could read headlines. Tech sell off extends on inflation fears. Tech sell off extends into Asia. South Korea, Taiwan stock losses on inflation fears. US fuel crisis sparks refiners to smash in oil. You know, it doesn't matter about this thing that they're showing you. Katy Perry sold a home. So what? Okay, thing is, GDP of Philippines shrinking more than expected amid virus fight. Philippine banks considering consolidation. Philippine banks GDP contracts. Japanese banks consolidating as margin pressures mount. Amazon raising $1 billion sustainable bond for climate and social causes. When I look at everything here, I still would understand. I explained last night actually Ray Kurzweil. No matter if you don't know what's going to happen day to day, what's very important for you to understand is that climate change is really happening. And the government right now of all the big important countries, China and US, have pledged. And that is something that Biden already has done. And you could see that these are more forever themes rather than what's going to happen tomorrow and next week. So knowing those forever themes, you should be fine to buy these Stan, Q Clean, just hold your positions on the solars, and you shouldn't actually be worried how low they can fall. No matter if Enphase continues, example, if Enphase drops to $100, I wouldn't be worried. Sure, people would like to short it. 120, they'll short it to 98. That assumes that they're very sure. But what I'll do is, considering it's at 118, I know that any rallies to 140, they'll sell it. So if there's a rally, definitely there will be some choppy action to the selling front. And then if it's oversold, people will continually buy. If Enphase drops to 100, I'll keep it. If Enphase goes to 140, I'll trim some. So I know that there will be lower highs for the next 3 to 6 months, and I'll just adjust. So that's the reason why I'm not like down 70% or 50%. I'm just like down 20%. And don't punish yourself. I think everyone here wants to punish themselves when the market is going down and they have a bleed. So what? I'm showing you these bleeds, right? I'm showing you 8% drops, 20% drops. These are even leveraged. And that's why I have to actually fix the stop losses here, right? So that I could handle it. If SunPower goes to $10, I could actually handle the drop. Example there. Oh, move that, it makes a reduction in my cash, that's fine. Because I'd rather keep these positions all the way down. Now, if you're telling me, oh, Nikki, that's a reaction, that's weird, $10, $20 to $10, agree. I don't think that these stocks will fall 50% down south. And I have no plans to actually sell or dump any of these positions. But I think that it's valid to listen to the market. The market wants to sell off. Listening to the market simply means that I'm still buying the market, but I'm just waiting for another sell off. Like if I wanted to post $20 on SunPower, let me see if I could buy it at 18 or 17, something like that. So I hope that you learned something today. I know that the market's a little bit bleeding, but just stay and hold on. The important thing there is you keep your positions while the market is selling off. Keep your sanity intact. That's important. Thank you. Bye-bye. Relax. That's all that we have to say. Relax and chill.